Welcome YouTubers, another video coming at you. Quick question, who knows about penny stock? Who trades penny stock? Who's fascinated by penny stock? Who wants to be a penny stock trader? Put your hands up. Come on, don't be shy. Just kidding, put your hands down, you look like a fucking idiot. Nobody can see what you're doing. Now, anyway, the reason I'm asking this is because I subscribe, support, and follow a guy, I believe, Stephen, you're from the UK. Liverpool is the UK, but you sound fucking Scottish. I don't know. I know you're not Irish, don't give me that shit. Now, Stephen Johnson, follow him, find him, dig him up, subscribe, come for a ride with his journey. He is basically a Tim Sykes student. He's just entered the Timothy Sykes challenge. He is going from zero to fucking hero in the penny stock world. He is documenting, YouTubing and videoing his journey as a no idea trader to a hopefully successful trader. Now, I hate penny stock. They are ridiculous to me. They make no sense to me. They are a 50-50 trade. You enter long, you make profit or you lose. You enter short, you make profit or you lose. Upon entry, it's 50-50. I don't understand why people want to play that game. But anyway, I like supporting Stephen. He's funny. I'm very interested in his journey. I wish I had done the same thing when I started learning to trade options. I began maybe near 10 years ago now, self-taught. I went through 3-4 years of hell, emotional roller coaster, financial roller coaster. I was trading full-time, learning full-time. I was teaching myself. I was doing 18-hour days, 7 days a week. To beat the system, to understand the system, to play the game. I saw swings, making $7,000 a night to blowing up $7,000 in a night. I don't know, maybe not seven, but definitely blew up $5,000 at a night on multiple times. I blew up, I think, 4 accounts in the first few years. Like I say, I'm coming up to nearing 10 years now. It's been a hell of a journey. It's been a long journey. And it's been a good journey and one that I will not ever give up on. I do not see myself doing anything but trading. I just love it. I'm a full-time trader now. I have been for a while. If I don't make profits on trading, I don't pay the bills. It's that simple. Now, Stephen said that options are risky and he can see you just blowing up your account. Now, as true as that might be, and yes, I can definitely verify you can blow up some accounts. I mean, like I said, I've blown up 3 or 4 accounts myself. The advantage with options is that they're not 50-50. They can be, and they can be more, they can be less. They can be a long shot, 5% probability. They can be a 95% probability. Depending how you structure the trade. At the end of the day, sorry about that, I had to duck out and now I've lost my train of thought. Don't know where I got up to. Puts and calls, options, that's all there is. Just puts, just calls. You buy and sell puts and calls, that's all there is to it. So you've got calls, you can either buy or sell them. You've got puts, you buy and sell them. Plain and simple. Now, you can totally change the risk factor, the potential probability by buying and selling whatever. You can add puts, calls, you can sell a different amount of each, you can do whatever you want to totally change the risk dynamics of the trade. Now, Facebook and Amazon, and this is what I want to touch on. Last week, they both reported earnings. I did a trade on them this week only. So opening the trades this week, closing the trades this week. Amazon was about $835 when I entered it. Now, what the fuck is this noise? Cocksucking neighbours. I sold a 890 call spread, 890 900 call spread, sold that for $1. I also sold a 740 750 put spread. Now, what does that mean? That means Amazon is at 835, thereabouts when I entered. I sold a 890 and a 900 for protection call spread for $1. I also sold a 740 750 for $1. Now what that means is I've got Amazon at 835 currently. I've sold the 750 and the 890. So as long as the stock stays between 790, sorry, 890. What the fuck am I talking about? I'm getting all mixed up and lost now. In between the construction site next door, my daughter running in and out. I'm going nuts today. It's almost vodka Red Bull time. Okay, back to it. So in between 890 and 750, so about $150 range on the stock. You got Amazon at 835, so between 750 and 890, about $150 range. If the stock ends up anywhere in that range by Friday, which was expiration, 4th of November, first week of November, Friday just gone. If it ended anywhere between that range, I make $1 per contract on the calls and $1 per contract on the puts. Now, what that meant was I had done a position, 5 contracts on each, 5 calls, 5 puts, $1 each, $1,000 credit. At the time I entered the trade, I took in $1,000 credit into my account. If it stays between the 750 and 890, I keep that whole $1,000. Now it did come down a little bit towards the end of the week, and rather than risking the puts profit, I basically closed it off for 30 cents. So I sold it for $1 and I bought it back for 30 cents. So I took 70% of that potential profit. So I took in $1, received $1 credit, and I had to give back 30 cents to close the trade off. The calls expired worthless, so I took maximum profit on that of $1. So all up I made $1.70 per contract, which worked out to be just over $800, about $840, including commissions. Now, the point I'm trying to make is I entered the trade at about 835. It doesn't matter if it went up or down, as long as it stays in that range. Now, that's $65 to the upside and $85 to the downside. 65 up, 85 down, anywhere in between there, and I made full profit. Now, had there been a share trade, which way are you going to go? Long or short? 50-50 chance of you making money versus losing money immediately. Second trade I was in was Facebook, another earnings play. Ridiculous fills. My broker is a prick. They give me rubbish fills. I did a call spread at 135.40 and I received 46 cents per contract for that. I did a 110.115 put trade and I got 13 cents for that, which is ridiculous because it cost me about 3 cents per contract, or 5 cents. I think it's 3 cents, maybe 3 to 5 cents per contract, just in commissions. Now, Facebook, I can't remember. I think it was about 128 at the time I entered, and so you got Facebook at 128. I'd sold the 135, 140. I also sold the 110, 115. So you got calls I've sold up here, puts you've got down here. So I had a $20 range between $115 and $135. A big $20 range. Now all I needed was Facebook, maybe 3 days or 2 days, 2 days I think it was. I think I entered Wednesday's close of the market. All I needed it to do was stay between 115 excuse me, and 135 for 2 days, and I make 100% profit, which was 59 cents per contract from memory. Once again, Facebook, is it going up? Is it going down? Who gives a shit? Who knows? I don't know. Nobody knows. Hell, Amazon beat earnings by 30% and it got its face ripped off. If you had a hint that Amazon was going to beat earnings, you'd long it. With all the hype and all the money they're making, they're now opening up stores in Australia, distribution centres in Australia. They are doing food distribution, I believe, in the UK. They are becoming a monster. You would have expected, hey, growth is happening. This thing's going up. It didn't. It got punished. It got dropped. Had you been long, you just got your ass kicked. Same with Facebook. Now, I don't even know what Facebook was happening with Facebook. I mean, who knows? And this is why I trade what I do. It doesn't matter if it goes up or down, doing an iron condor, as long as it stays in a range. And I had a $20 range for 2 days. It stayed in that range. I made 100% profit on my trade. I think Facebook, from memory, was an 88% probability of success. 88%. Think about that. I've only got 12% chance of this trade turning to crap. 12%. I don't know why people will trade stocks. I really don't. Amazon, I'm not too sure what that was, but I believe that was probably about an 85% probability of success. But anyway, I will leave links to the video in the description below. The Facebook entry, the Facebook opening of the close basically of earnings, so pre-earnings, after earnings, also Amazon pre-earnings and after earnings, and you'll see in the opening of after earnings, you'll see the effects and the trades just get wiped out and the profit nearly maximizes instantly. Definitely within a few minutes. Anyway, I hope this clears up a little bit on why options are better than stock. They are risky, but they are not as risky as stocks, CFDs, futures, Forex. Fucking don't even talk about binary options. That's just a BS scam. Only idiots get into binary options. But there you go. High probability, constant trades. I place most of my trades, if not all of them, online to be accountable publicly for my own, history, so to speak. Something I can look back on later on. Most of these trades are coming from a small account that I'm trying to show you can build up from, because most people that are doing penny stocks have a small account. So, rather than them doing like $1,000 or $2,000 penny stock position, I'm trying to do similar things with options where I'm using $1,000 to $2,000 per trade, and it's what I'm doing is more about the consistency, showing you that I can have consistent run of winners because I'm dealing with the probability of success. It is what it is. So yeah, I hope you like it. Hope you can understand a little bit of what I've been jacking on about. Like, subscribe, check out Stephen Johnson's penny stock career in the making. Subscribe to him, give him some support. Leave a comment below if you want, but check out in the description and I'll leave the Facebook and Amazon trades right there for you to check out. Happy days to you. It's the weekend. Markets are opening tomorrow night. well, for me, it's going to be a good time. See you on the next video. Stay away from those penny stock and put your fucking hands down. You look like a dick.